Joining us now is Peter McNally from Third Bridge. Peter, it's a good moment, sure, with these numbers out and the beats on the top and bottom, but I wonder how much of a factor, particularly Boeing, is in this, with nearly 10% of the existing fleet at United affected. And I guess questions about deliveries in the future. Their operations are running well now, but for how long?
Well, it's the single biggest factor for United. They're giving us a very confident message this evening. CapEx in 2024 is going to be $9 billion, and almost all of that is going to go towards planes. Now, that's up from about $8 billion this year. But here's how we'd be thinking about it. For the last 5 quarters, they've added 20 737 MAXs every quarter. And by the second and third quarters of this year, 2024, that's got to get to 23 to 24 after a dip to 16 in the first quarter. Now, the key there is, will those planes be in service for the summer travel season? And that will determine probably whether or not they're at the $9 end, the low end of the guidance, or the $11 that they're giving us. A lot of different factors, are in there. But for us, that's the biggest one that we see.
Right. OK, so that supply of planes. What about costs with pilots, flight attendants, other staffing? This became an issue coming out of the pandemic. How much of that is figured out by now?
So the way our experts in Third Bridge have described it, it's planes, people, and pilots are the three, big issues. Planes, it's about Boeing. The pilots, are a long-term issue. You can't get on a United flight these days without seeing them advertising, come join their academy. Long-term issue, not going to be solved very quickly, but they're paying more people to be pilots, and it's a good place to work. And then, the other parts of the people equation, the rate of increases, wages probably slowing here after surges in 2022 and 2023. A lot of the big negotiations are done, and that's baked in, but we certainly wouldn't expect a retreat on those costs. And that, people are the biggest cost for an airline. Fuel costs will be a bit of a tailwind, we think, in 2024, but probably not enough to offset the wage increases we've been seeing.
So, Peter, the stock's up 5.5% right now, call it, United. Do you buy at these levels? How does this set us up for the rest of airline earnings? And I ask this as the group as a whole, these stocks have just been hammered for months now.
Well, let's roll back to, last week. Delta set the bar pretty low here by giving maybe a bit more cautious guidance. I mean, United has been the most aggressive of the major airlines in the United States. I mean, they spent more money in 2023 than American and Delta combined on CapEx. There is a long-term growth plan here, and United is not backing off, it one bit. So it is a more confident outlook than what we're seeing from others in the industry. The good news about air travel is demand is great. The question is, can we get enough planes to meet that demand? And that's the single biggest question that's out there. Our experts are a little dubious that that Boeing is actually going to be able to pull this off. We were questioning this prior to the door blowing off the Alaska Airlines flight a few weeks ago, but we're going to see.